Today in this video, we're going to talk about the 5 things you need to know about USDA loans that no one else is talking about. And believe me, you want to stay to the end because number 5 will blow your mind. Check it out. Hi, I'm Rhonda Burgess. I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. And my firm is Southern Living Realty Partners. All right. Let me just give y'all some quick little tips about USDA loans that are tripping a lot of folks up and it's got a lot of people confused. So let me tell you so that you can keep this in mind if you're thinking about going the route of a USDA loan or a rural housing loan in your area. Number 1, I've been getting so many calls right now and this is from all kinds of different states. I've had calls from Georgia. I had a call from someone in North Carolina. I've had calls from people here in Tennessee talking about, I'm approved for a loan. I'm approved for a USDA loan, but they're telling me they can't fund it. That's true. They cannot fund it right now. Now, they may have gotten some funding in the last week or so, but as far as I know, they still hadn't. Listen, USDA gets their funding directly from Congress. Okay. The money has to be appropriated for USDA, whether you are direct or guaranteed, either side of the business. Okay. So normally every year, it used to happen right at, in October, when the Fed's fiscal year runs from October 1st to September 30th, they would run out of funding sometime in October. But the last few years, especially when I was with USDA, it always happened in January. And there would be like 3-4 weeks where the continuing resolution has run out that Congress has been operating on. Because, we haven't had a budget from Congress in I don't know how many years now. They keep running on these continuing resolutions. Okay. And there's only so much funding in that continuing resolution. There's only so much funding. So when that funding runs out, and you see how Congress was supposed to come out with another, everybody's talking about when the government shuts, possible shutdown in December, right? And, miraculously, it hasn't been since I think Obama was in office the last time we had a shutdown, where they couldn't come to a meeting of the minds and there was no more money and there was not another continuing resolution to the budget. So that's what would happen. The money runs out. And there's nothing that USDA can do, which USDA is the largest department of the government. Huge. There's nothing they can do because they don't have money, because they don't have funding. They don't have appropriations from Congress. So don't think that it's just happening to you, like they're singling you out or they're singling this state out or whatever. No, they don't have any money, period. Even if you are on the guaranteed side of the business and you went through a lender, that's cool, but still they don't have money. The only thing we could do would give them a conditional commitment on the guaranteed side saying, yeah, when we get some money, we'll fund it, but we ain't got no money right now. So what you gonna do? That's just how it is. So it's nothing in particular about your state or anything. If that don't work for you, call up your congressperson. Call up your congressperson, tell them they need to get to work on a budget, and they need to get the funding back, because it's not you. It's just that USDA does not have the money because they haven't gotten the money from Congress, because Congress does not have a budget and or the continuing resolution has run out. That's number 1. Number 2 of the facts about USDA that you need to know. Okay, first of all, there is a USDA loans have what we call a loan guarantee fee. I'm talking on the guaranteed side right now. Okay. There's a loan guarantee fee. Every year around about September, October, the end of that fiscal year, they put out how much the fee is for the upcoming year. So in September of 23, they came out and said the guarantee fee, the loan guarantee fee will be 1%. It can be as high as 3.5%. Like in 2016, 2017, I think it was like 2.5%. Maybe it was even 3. I don't know. It was high. It was high then. And that again is set by the government. And it's like it's a fee to fund other USDA loans. Okay. That's how they get their funding. is through the funding fee. That's another way they get funds. Besides the money they get from Congress, they have a funding fee. And right now it's 1%, 1.0%. So if you were getting a $200,000 guaranteed loan and the funding fee is 1%, so that means that's a $2,000 funding fee that you have to pay as the borrower. Now, a lot of lenders, most of the time, probably about 95% of the time, they roll that into the loan because it can be rolled in. The funding fee, the upfront funding fee, can be rolled into the loan. So that instead of you getting maybe a loan amount of $200,000, you would get a loan amount of $202,000. So you can roll it in to your loan. You can pay it up front if you want to. I have seen on occasion where we've had to have borrowers pay that funding fee like as part of their closing costs because there was absolutely no more room in that DTI. Like if we put that other 2% on top of the loan amount, it was killing the DTI. It was killing the whole deal. So just know that sometimes you may be asked to pay that funding fee up front instead of rolling it into the loan. But normally everybody just rolls that 1% fee into your loan amount, and that is again your guarantee, your loan guarantee fee is what we officially call it at the USDA. All right, number 3 that we're going to talk about for USDA loans is the annual fee. Okay, one reason why people love the USDA loans, not only because it's 100% loan, seller can pay up to 6% finance, 6% of your closing costs. You can use down payment assistance, closing cost assistance from your local government with it. You can do all of that. But another reason why we love the USDA loans is because their annual fee is less than the mortgage insurance fee on FHA loans. It's lower than the mortgage insurance fee on conventional loans. They call it an annual fee. You can call it, it's not mortgage insurance. It's their annual fee. It's the same thing. So like on FHA, if FHA has like a 0.50 as their mortgage insurance, their monthly mortgage insurance, USDA's is 0.35. And again, they set that annual fee and that the upfront fee. They set that each year. They publish that in October of what it's going to be for the upcoming year. So just know that it is much cheaper. 0.35 is going to be cheaper than your 0.78 is one calculation you see a lot on conventional loans. Okay. So just know that they do not have, USDA loans do not have PMI or MIP, a mortgage insurance premium, or PMI, private mortgage insurance. They don't have that. But USDA loans have what we call an annual fee, and it is currently 0.35. Like I said, and every year you just need to check and see what is going to be that upfront fee and what is going to be the annual fee, because they use that money again to service the program and to, do additional loans in the future. That was number 3. Okay, number 4. Let's talk still about that annual fee. Okay. Remember I said the annual fee is not PMI. So it is not mortgage insurance. Okay. So, and it's set every year, from the previous year. So like I said, for 24, it's 0.35%. The annual fee can't go higher than 0.5%. It'll never go higher than 0.5. But there have been several years that we were running at 0.5. So it was, pretty much equal to what FHA was. But the one thing I want you to know is that the annual fee is for the life of the loan, period. So, on conventional and FHA, when you pay it down to 80%, when you pay your loan down to 80% loan to value, you can ask your lender about removing your PMI, right? And at 78% LTV, when you've paid it down, at 80% you can ask. At 78%, it has to go away, right? It has to go away. That's the rules. That's the law. That doesn't apply to USDA because it's not PMI. So the annual fee is for the life of the loan. So don't think that when you get to 80% or 78% that you finna drop that, because it's not mortgage insurance. It does not go away. The annual fee is for the life of the loan, as long as you have that USDA loan. All right, and number 5. This is the mind blower right here. And I just got reminded of it because I got a call. I had someone schedule an appointment with me last week, wanted to talk about a USDA loan. Now, remember, I had told y'all I am an advocate for the guaranteed program. I underwrite guaranteed. I do not underwrite direct. Direct USDA rural housing loans are for low income and very low income. They're the 502 and the 504 program. That's the section of the handbook, okay? They are for low and very low income people buying houses in a rural community. Now, what happens on the direct side? Okay, let me say one more reason why I'm an advocate against, I don't want to say against the direct loan, but I'm an advocate for the guaranteed. One thing y'all need to remember that I've went over before, when you're dealing with direct, you're dealing with USDA direct, okay? USDA is essentially your lender. You're dealing with a USDA employee, okay? So it has to be a USDA loan specialist that's going to help you, that's going to be your originator. They're going to go through all the paperwork and everything. I'm not talking bad about USDA employees. What I want y'all to know is that the 502, 504 programs are vastly underfunded, okay? In fact, when they was talking about abolishing the 502, 504 programs because they're really a lost leader for the USDA. That program doesn't make money, and it doesn't get near the amount of funding that it needs. So in saying that, your loan specialist that you're dealing with at USDA when you're trying to get a direct loan, that person, and a lot of times it is maybe one person, maybe two. There may be a specialist and the specialist and then the tech that cover as many as 10 or 12 counties. I've seen where there's only one employee to handle a whole state. One direct employee to handle the whole state. A lot of times they may have 10 or 12 counties. And not only does that employee handle the direct program, we've got there's a program like if you need repairs to your house, let's say your house got damaged in a storm or something like that, they have to cover doing those loans. They may have to help with servicing the loans. Like if you fall behind, they may ask that specialist or that technician to go out and try to, touch base with you, see what's going on, try to get you back on track and everything. See, they've got a lot of moving parts if you're talking about somebody handling 5, 6, 7 states. So that's why I say I've never seen a direct loan close quick. When you're on the guaranteed side, the lender that you're going through, whichever bank, whichever mortgage broker, whatever, they have a vested interest in you closing. They want you to close as fast as possible because they don't get paid on that loan until you close. Whereas you see the difference when if I'm the direct loan specialist and I got 8 counties and I got people pulling me this way and pulling me that way and I'm trying to handle all of this stuff. Do you see why you may not be on high on my list, depending on how long my list is and who all screaming the loudest. So that's another reason why it takes direct so long to close normally, because those employees are underworked and that department is underfunded. So just keep that in mind. But what I want to talk about is the subsidy and subsidy recapture. Okay, so when you do the 502, the 504 programs, that's low income and very low income, the USDA gives you a subsidy to subsidize your payment. Okay, so you may get, let's say if it's $100,000 house, you may get let's say USDA gives you you get a loan for $60,000, but they give you a subsidy of $40,000, and maybe that subsidy is only at maybe a 1% interest rate, or it may be at a 0% interest rate. It doesn't. They have their way that they calculate how much your payment can be. I don't work direct. So, but listen to what I'm telling you. So you may get a loan for $60,000, but they subsidize you for $40,000. Okay. When you pay off that $60,000, let's say you've been diligent, you've been working, and you pay off that $60,000. That $40,000 is still sitting there. You still have to pay off that $40,000. Okay? Just point blank simple. The subsidy does not go away. It does not go away. So let's say you want to sell the house. You've been in the house for 10 years and you want to sell the house. You're going to have to repay that subsidy one or two ways. And there's one or two ways they're going to calculate how much of the subsidy do you still owe. Because it's going to be equal to half of the amount that the house has appreciated or the amount of your subsidy, whichever is less. So let me give you a quick breakdown of that. Okay, on that same $100,000 property, you had a loan for $60,000. Then over here you had a subsidy of $40,000. Okay. Now there's some other little things they'll take into account, like your closing costs, stuff like that. But that's not really gonna move the needle that much. So let's just concentrate on the 60 over here and the 40 over here. At the same time, you've been living in this house, let's say for 10 years. Okay. So now that $100,000 house is worth $200,000. Okay. So you essentially have $100,000 in equity. You took it out for 100. It's worth 200. So the difference is $100,000. That's how much your home has appreciated. So what you owe the USDA on this direct loan is you either gonna owe them half of that equity. Half of that 100,000 is 50,000. Or you're gonna owe them the 40,000 of the subsidy they gave you. So it says it's going to take the lesser of the two. So you would still owe the 40,000. Or let's say out of that 40, you're only left owing maybe 30. Okay. Because you have been paying it down. Right. So that has come down some. So you either going to pay 50,000, which is half of the amount that your property has appreciated, or you're going to owe the 30,000, which is how much you have left owing on that $40,000 subsidy that they gave you in the first place. Okay. So in this situation, you would still have to pay out $30,000, even though you've paid the 60 that you owed. Listen, there's no free lunch. There's no free lunch. There's no free lunch. So even if you want to sell that house, and the way these prices, and everything have appreciated. Yeah. That would be when you go to get a payoff. Let's say you selling your house. You done called a realtor. They done come over here, put a sign in the yard, put a lockbox on the door. We gonna sell the house. Yay. Cool. But when you go to get that payoff, when you call St. Louis to get that payoff, just be aware that even though you may have paid off that 60,000, you still owe either that subsidy or half of that equity. And somebody's gonna have to do a manual configuration to figure out how much you still owe, but you are not going to be able, you thinking you paid off at 60,000, you finna ride out with all this equity. Oh no. The government is going to get back either the amount that you still owe on that subsidy or half of what your property has appreciated for, the lesser of the two. That's just it. There's no free lunch. And what a lot of people don't understand is they thinking they going to go sell this house and maybe they ain't even paid off the 60,000. Maybe they've only paid off some, but you looking at how much your property has appreciated and you thinking to yourself, oh, okay, I'm going to make out like a fat cat. Oh no, the government is getting their money back too. So this is another reason why I do not advocate for anybody to go direct. If you can go guaranteed, go guaranteed. Because if you can afford it, do you see how this will linger on forever? It will linger on forever and you will never truly get, you're not owning that house until that subsidy is paid off. Again, my name is Rhonda Burgess and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. If you need assistance with buying or selling a home here in the area, or you need assistance with your loan, my contact information is below and you can feel free to schedule a time to chat with me. Thank you. And as always, have a blessed day.